Welcome, folks. Today, we'll take a look at another tool, a powerful tool that you can use to find lower prices whenever you're shopping for your favorite stock or crypto. Now, let's be honest. If I was to ask you, why did you pick the price to buy your favorite stock, would you be able to explain it to me? Maybe you looked at a chart, you opened it up, and you just looked at the high and the low, and you just picked the lowest price for that year. But today, I'm going to show you another way that you can pick lower prices. It's very simple. This will be a very invaluable tool to make better educated decisions, not blind guessing. We're jumping into chart for Tesla, and we're looking at the daily. And let's jump into understanding simple moving averages. First thing, let's draw it on the chart. Go to indicators, and you could just type in simple, and you'll see simple moving averages. I'm going to add the 5, the 20, the 50, and 200, four of those, and I'll explain what those different numbers mean. 1, 2, 3, 4. And on the left side, there's a pointy arrow down. If you expand it, we have 4 simple moving averages. I will click on each one of these. The first one will be the 5. And the style, let's make it orange. And I will make them different colors so we can tell them apart. Double click on the next one. We'll make this 20. And for this one, I will make it green. The next one will be the 50. We'll leave it purple. And the last one will be 200. This one, we can make it red. Here we are. We have 5 simple moving averages, the 5, 20, 50, and the 200. Moving averages simply means the average price that it closed in the last 5 trading sessions. For example, 5 for 20, it's the last 20 trading sessions. And so if I expand the candles, 1, 2, 3, 4, 5, we average these 5 for the 5 simple moving average, and we take the average of the closing prices, always the closing prices. And it goes the same with the 20. So we're going to take the last 20, the last 50, the last 200, etc. So that's point number 1. Point number 2 is, what do you do with the moving averages? The moving averages can either be a floor support if the price is, for example, over, this is the 5, then this 5 simple moving average becomes support level. It becomes a floor. If the prices come down on this floor support, it can provide support for the prices to turn back up. If the price is below the moving average, and we'll take the same 5 simple moving average, this moving average becomes resistance. It becomes a ceiling. So if the prices come down and it comes back up to the 5 simple moving average, which is now acting as a resistance, that can turn the price back down, which it did. And eventually it broke back up. So this became support. So it flips between support and resistance. And you can see with the 200 moving average, all the prices are above it. So this 200 moving average becomes floor support for all the price action after this period of time, back in August. How do you use these simple moving averages to find safer lower buy prices? If the price is above it, you can wait for the price to come back down, touch that floor support. Here's the 50, the price is above it, it comes back down, touches it, and you can target a lower buy price level at that floor support. Again, here, and if we go back, let's say back in May, the price has gone up, it's gone up, it's gone up. And right now, it's at 368. You can wait for the price to come back down to the 50 simple moving average at about 290, which would have been roughly a 20% savings on a $363 stock. So now you can spot better buy entry zones by using simple moving averages. The question you might be asking, do we wait for the price to come down to the 5, the 20, the 50, or 200? If you are a day trader, then you're going to focus on the 5 and 20 because these are the most recent price actions. So the last 5 days. So you want to use recent prices for short-term trades. For mid-term trades, you're a swing trader and you're more focused on several weeks to a month or two, then you're going to look at the 50 and the 200. And for long-term traders, the long-term buy and hold traders, you can just focus on the 200 simple moving average. The price right now for Tesla is currently $430. If I want to start dollar cost averaging for the long term, then maybe I can wait for prices to pull back towards the 200. So instead of buying at 430, I can target lower buy prices at the 5, buy a tiny portion there. And as I am moving towards dollar cost averaging down to $340, I can buy in increasing size positions, buy more and more on the way down. And that way, if I hit that price target at about 340 from today's current price, that's 20% savings. I will be more confident in my buy decisions at buying at 340, knowing that there is a strong support level at this 200 simple moving average. And that's it. That's today's quick tip lesson on how to use simple moving averages to find better, safer buy prices so that you feel more confident and you can sleep better. And most importantly, you're not overpaying. If you enjoyed today's video, please subscribe to support this channel. I will see you next time.